Hey guys, welcome back. Hope you are doing well. Today we're going to talk about the importance of emergency funds. We will be talking about the amount of money that you should have based on your family size, how long it should last, where to keep it, and also what expenses we should be expecting in times of an emergency. And so if that sounds interesting to you, then please make sure to stick around until the end of this video. What an emergency fund really is, the first thing to understand is that an emergency fund is not just extra savings. It's a safety net built for the unexpected moments life throws at you. Think of it as your personal shield, money set aside only for true emergencies. This fund gives you breathing room when life gets messy, so you don't have to rely on credit cards, payday loans, or borrowing from friends. It's not for vacations, new gadgets, or just in case I want it. It's strictly for those rare but serious events that can shake your financial stability. The kinds of expenses it covers. So what exactly does an emergency fund cover? Let's start with the obvious ones. It can handle medical bills, whether it's a sudden trip to the hospital or an unexpected prescription that costs more than you planned. It can cover car repairs, because cars always seem to break down at the worst possible time. Beyond that, an emergency fund also steps in when income stops. If you lose your job, get laid off, or face a disability that keeps you from working, this fund can help cover your bills until you're back on your feet. Without it, one paycheck missed can easily spiral into late fees and debt. When disasters strike at home, life doesn't only throw personal setbacks. Sometimes it's the house that takes the hit. Flooding, fire, storm damage, or even theft can create sudden and expensive problems. Insurance might cover some costs, but not always all of them, and claims can take time. That's where your emergency fund fills the gap, giving you fast access to money when you need it most. The goal isn't to cover every possible problem in full, but to soften the blow so you stay in control during hard times. With the right emergency fund, life's surprises don't turn into financial disasters. What the numbers really show, according to a survey by Bankrate, most Americans would need about $1,000 to cover an average financial emergency. That could be anything from a sudden car repair to a medical bill that insurance doesn't fully cover. But here's the tough part. The same survey of 25,000 people across the US found that the average person only has around $400 saved for emergencies. That means most people don't even have half of what they'd need to deal with life's surprises, leaving them vulnerable to credit card debt or payday loans when something goes wrong. Why $1,000 isn't enough for everyone? That $1,000 figure is just a ballpark estimate, not a one-size-fits-all number. Your real emergency savings target depends on your lifestyle, income, and responsibilities. For example, if you rent an apartment and don't have dependents, a smaller emergency fund might get you by. But if you own a home, have a family, or rely on one income stream, your needs are much higher. A broken furnace, child medical care, or even a short period without work could easily cost several $1,000s. That's why experts often recommend saving 3 to 6 months worth of expenses instead of just a flat $1,000. Why this matters for you: the gap between what people need and what they actually have saved is a big warning sign. It shows how unprepared many households are for life's curveballs. The good news is that you don't need to build the full emergency fund overnight. Even putting aside $20, $50, or $100 a month can slowly build a cushion. The key is consistency. As this video continues, we'll break down exactly how much you should aim for based on your situation and practical steps to start building your emergency fund today. Quick overview before we dive in. Before we jump straight into the details, let's take a moment to walk through what you'll learn in today's video. That way, you know exactly what to expect and can follow along easily. Think of this as our roadmap. We'll be hitting all the key points you need to understand how to build and manage an effective emergency fund. What we'll be covering: the average cost of living, why it matters when planning your safety net, what makes a good emergency fund size, and how to know if yours is on track, the best place to keep your emergency savings safe, accessible, and ready when you need it, how much money to save based on family size, because a single person's needs look very different from a family of 4, how long an emergency fund should last, so you're covered for more than just a week or two, the Types of expenses to expect in an emergency, from medical bills to job loss, car repairs, or even household disasters. Let's get started. By the end of this video, you'll have a clear picture of not just why you need an emergency fund, but also how much you should set aside and where to keep it. If that sounds good to you, go ahead and hit that thumbs up button and let's dive right into it. How much should you really save? When figuring out how much money to keep in your emergency fund, there's no one-size-fits-all answer. Everyone's situation is different, from income and lifestyle to family size and monthly expenses. That said, a simple rule of thumb that many experts recommend is saving 3 to 6 months worth of living expenses. This gives you a cushion to rely on if unexpected events arise, whether it's a job loss, medical emergency, or a major home repair. What counts as living expenses? So, what exactly do we mean by living expenses? These are the essentials, the things you can't go without for daily life. That includes food, housing or rent, utilities, clothing, transportation, and any other bills that keep your household running. By focusing on these basics, you can calculate a realistic emergency fund goal. For example, if your monthly essentials add up to $3,000, then a 3-month emergency fund would be $9,000, while a 6-month fund would be $18,000. Why 3 to 6 months works. The 3 to 6 month range is designed to give you enough flexibility to weather most financial surprises without panicking. 3 months might cover shorter-term emergencies like minor job interruptions or small medical bills, while 6 months provides extra protection for longer or more costly challenges. The key is to save consistently and avoid dipping into this fund for non-emergencies. Over time, even small monthly contributions add up, giving you peace of mind and financial security. However, if you're self-employed or maybe your industry is prone to economic downturns or recessions, then you might want to aim for the higher end of that range. So that would be the 6 months. Similarly, if you have dependents or if you are a single earner in a family, then having that 6-month emergency fund could really come in handy. Another important factor to consider is your debt level. So if you have a lot of high-interest debt, then you might want to build up a bigger emergency fund to help you pay off that debt faster and avoid paying those high interest rates. For example, credit card interest rates are currently around 25%. So if you have a few $1,000s in emergency savings, instead of using that to pay off your credit card bill, you may want to use it for an emergency expense. You also want to take into consideration your age and your overall health. So if you're approaching retirement or maybe you have health issues, then you may want to have a larger emergency fund to cover any unexpected medical expenses. Now when you're building your emergency fund, you want to start small and just be consistent. So even if you can only afford to save $50 a month, just get started. Set up automatic transfers from your checking account to your savings account every month, and then just watch your emergency fund grow over time. You'll be surprised at how quickly it can add up. Where to keep your emergency fund? Once you know how much you want to save, the next step is deciding where to keep it. One key rule: keep your emergency fund separate from your regular checking or savings accounts. This prevents the temptation to dip into it for everyday expenses like dining out, shopping, or bills that aren't urgent. Treat it as a true safety net, money you only touch when an actual emergency arises. The best accounts for your fund. The ideal place for an emergency fund is a balance between accessibility and earning potential. You want your money to be liquid, meaning you can withdraw it quickly, but also to grow a little with interest. A high-yield savings account is perfect for this. These accounts usually offer much higher interest than traditional savings accounts, while still letting you access your money whenever you need it. Tips for choosing the right bank when shopping for a high-yield savings account. Online banks often offer the best rates. Popular options include Ally Bank, Marcus by Goldman Sachs, Wealthfront, and SoFi. Just make sure the bank is FDIC insured up to $250,000, so your money is protected even if something goes wrong with the bank. Take a few minutes to compare rates and features. Even small differences in interest can add up over time. By keeping your emergency fund in a safe, separate, and interest-earning account, you ensure it's ready for when life throws an unexpected challenge your way. Other options for your emergency fund. While high-yield savings accounts are a top choice, there are a few other ways to store your emergency fund depending on your goals and comfort level. One option is a money market account. These accounts often offer higher interest rates than regular high-yield savings accounts, which helps your money grow faster. However, many money market accounts come with minimum balance requirements, so it's important to read the fine print before opening one. What about CDs? Another possibility is a certificate of deposit, CD. CDs usually offer even higher interest rates, but there's a catch. Your money is locked in for a fixed period of time, which could be several months or even years. That means you can't access it quickly if an emergency happens tomorrow. Because of this limitation, CDs are generally not recommended for emergency funds unless you're certain you won't need the money for a long time. Choosing the right account the key with any emergency fund is liquidity. You need to get your money fast when life throws unexpected expenses at you. High-yield savings accounts are usually the most practical. Money market accounts can be a solid alternative if you can meet balance requirements, and CDs are best used for long-term savings goals rather than emergencies. By carefully choosing the right account, you make sure your emergency fund is both safe and ready when you need it most. How family size affects your emergency fund. When planning your emergency fund, family size makes a big difference. The more people relying on your income, the larger your safety net should be. That's because more mouths to feed, more bills to pay, and more responsibilities mean that emergencies can become much more expensive. Guidelines based on family size: single, save enough to cover 3 to 6 months of your own living expenses. Couples, save 3 to 6 months for both of you combined. Families with kids, add 1 extra month of expenses per child to your fund. This approach ensures that your fund can realistically cover your household's needs during unexpected events like job loss, medical emergencies, or major repairs. Examples to make it clear: single. If your monthly expenses are $2,000, your emergency fund should be $6,000 to $12,000. Married couple. If your combined expenses are $4,000 per month, your fund should be $12,000 to $24,000. Married with 2 kids. If your family spends $6,000 per month, your fund should be $18,000 to $36,000. Keep in mind these are guidelines, not strict rules. Your personal circumstances, such as job stability, health, and other financial obligations, may mean you need more or less. The key is to have enough set aside to cover the essentials and give yourself peace of mind when life throws unexpected challenges your way. How long should your emergency fund last? Once you know how much to save, the next question is how long that fund should actually cover you. Most experts recommend having enough to cover 3 to 6 months of living expenses. This range is considered enough to handle common emergencies like job loss, medical bills, or unexpected repairs without going into debt. When 3 to 6 months is enough if you have a stable job with low risk of layoffs and predictable income, a smaller emergency fund, closer to 3 months of living expenses, may be sufficient. This gives you a safety net while keeping most of your money working for you elsewhere, like savings or investments. When you need a larger cushion, on the other hand, if your job is unstable, your income fluctuates, or you have dependents, you'll want a larger emergency fund. In these cases, saving 7 to 9 months worth of expenses can provide more security. This extra cushion ensures that you can handle longer periods without income, medical emergencies, or other unexpected financial challenges. Key takeaway: the exact length of time your emergency fund should cover depends on your personal circumstances. Consider your job stability, household size, monthly expenses, and potential risks. The goal is to have enough money to get through tough times comfortably without relying on loans or credit cards. By tailoring your emergency fund to your situation, you protect your finances and gain peace of mind for whatever life throws at you. Understanding emergency expenses: when building an emergency fund, it's important to know what kinds of expenses it should cover. Emergencies can create both immediate and long-term financial needs, so it helps to break them down into 2 categories: short-term and long-term expenses. This makes it easier to plan your fund effectively and ensure you're fully prepared. Short-term expenses are immediate and essential costs that pop up right after an emergency. These are the bills and payments you can't put off because they keep your life running. For example, rent or mortgage payments. Staying in your home is a top priority. Utility bills, electricity, water, gas, and internet to keep your household functioning, groceries, food for you and your family, transportation, gas, public transit or other commuting costs, insurance premiums. Keeping coverage active to avoid gaps in protection. These short-term costs are the foundation of your emergency fund. They allow you to stabilize your day-to-day life and prevent minor emergencies from turning into bigger financial problems. By covering these essentials first, you can focus on recovery without falling behind on your regular obligations. Why categorizing matters. Knowing the difference between short-term and long-term expenses helps you allocate your emergency fund wisely. Short-term expenses get priority because they need to be paid immediately, while long-term expenses can be planned for once the immediate crisis is under control. This approach ensures that your emergency fund is both practical and effective, giving you peace of mind when life throws unexpected challenges your way. Long-term emergency expenses. Long-term expenses are less urgent than short-term costs, but they are still critical for fully recovering from an emergency. These are the bills and costs that help you get back to your normal life once the immediate crisis has passed. Examples include medical care, doctor visits, treatments, or therapy after an accident or illness, property repairs, fixing damage from flooding, fire, storms, or other disasters, legal fees in case of disputes, claims, or emergencies requiring professional help, replacement of stolen or damaged items, clothing, electronics, or other valuables. Including long-term costs in your planning ensures your emergency fund is comprehensive and won't leave you scrambling once the initial crisis has been handled. Short-term expenses with numbers to make planning easier. Let's break down some common short-term expenses with approximate US averages. Housing. Average rent is about $1,000, plus utilities around $300, totaling $1,300 per month. Groceries. About $300 per month for one person. A family of 4 would spend roughly $1,200 per month. Transportation. The average cost of owning a car, including gas, insurance, maintenance, and repairs, is $700 per month. If you have multiple cars, you'll need to account for each one. By having a clear picture of these numbers, you can estimate your short-term emergency needs accurately. This helps ensure that your emergency fund covers essential living expenses immediately after a crisis, while long-term costs can be addressed gradually as you recover. Planning your fund, combining both short-term and long-term expenses in your emergency fund planning, gives you a complete safety net. You'll have enough to survive the immediate shock and enough to rebuild your life afterward. This approach reduces stress, prevents debt, and keeps your finances stable even when life takes unexpected turns. Why long-term emergency expenses are hard to predict. Long-term emergency expenses are tricky because they depend heavily on the type of emergency you face. Unlike short-term costs, which are fairly predictable, these expenses can vary widely from one situation to another. For instance, if your home experiences a fire, you may need to pay for temporary housing while repairs are completed. If you face a major illness, extended medical care could quickly become very expensive. The key is to plan for flexibility in your emergency fund so you can handle different scenarios without stress. Examples to illustrate. Let's look at some concrete examples to understand potential long-term costs. Car accident. If your car is totaled, you might need a rental car while your insurance processes the claim. According to Enterprise Rent-A-Car, the average cost of a rental car is about $56 per day. For a week, that's roughly $392. Medical expenses. If you're injured in the same accident, you may face hospital costs. The American Medical Association reports that the average hospital stay costs around $30,000 for a week. If the stay is longer or additional treatments are needed, costs can rise significantly. Planning for the unexpected. Because long-term emergency expenses are unpredictable, your emergency fund should include extra padding beyond just short-term bills. Even if you can't estimate the exact amount, having a reserve for large, unexpected costs can prevent debt and provide peace of mind. Think of it as an insurance layer for your emergency fund, a buffer that helps you recover fully from major setbacks without derailing your financial stability. Long-term emergency expenses. Home disasters. One of the most serious long-term emergencies is a house fire or similar disaster that destroys your home. In these situations, your emergency fund needs to cover more than just daily living costs. It must help you stay afloat while rebuilding your life. Temporary housing costs. If your home is uninhabitable, you'll need temporary housing. The average cost of a 2-bedroom apartment in the US is about $1,400 per month. If you need to stay for 3 months while repairs or rebuilding take place, that adds up to roughly $4,200 just for shelter. This is a critical short-term expense that ensures you and your family have a safe place to live while the larger recovery process unfolds. Replacement of belongings beyond housing. You'll likely need to replace household belongings destroyed in the fire. According to the Insurance Information Institute, the average cost of replacing household items is about $45,000. This includes furniture, electronics, clothing, kitchenware, and other essentials. Even with insurance, there may be deductibles or items not fully covered, so having additional emergency funds can help cover these gaps. Why planning matters. Disasters like this are rare but extremely costly. By including long-term, high-cost scenarios in your emergency fund planning, you create a cushion that can carry you through significant life disruptions. Your emergency fund should provide peace of mind, knowing that even in the worst-case scenario, you have the resources to rebuild without falling into debt. It's about financial resilience, being prepared not just for small surprises, but for life-altering emergencies as well. Why having an emergency fund matters. As you can see, emergency expenses can vary greatly depending on the situation. From car accidents and medical bills to house fires, the costs can quickly add up. That's why it's always best to prepare for the worst-case scenario. Having an emergency fund gives you peace of mind, knowing that money is set aside to cover unexpected expenses without derailing your financial stability. Tips to build your emergency fund faster. Building an emergency fund can seem daunting, but there are practical ways to speed up the process. 1. Track your spending and cut back. Start by analyzing your expenses to see where your money is going. You can use a budgeting app or a simple spreadsheet. Identify non-essential spending and redirect that money toward your emergency fund. 2. Set up automatic transfers. Schedule monthly transfers from your checking account to your savings account. This makes saving effortless and consistent. Just ensure the amount is sustainable and doesn't interfere with paying your bills. 3. Sell unwanted items. Turn unused clothes, furniture, electronics, or other items into cash for your fund. Platforms like Facebook Marketplace, Craigslist, eBay, Poshmark, and Mercury make it easy to sell items quickly. 4. Take on a side hustle. Earning extra money through freelancing, driving for Uber or DoorDash, or other side gigs can help you boost your emergency fund faster. Even a few extra hours a week can make a noticeable difference. Final thought. The key to building an emergency fund is consistency and creativity. By tracking your spending, automating savings, selling unused items, and exploring side hustles, you can steadily grow your fund. Over time, this safety net ensures that when life throws surprises your way, you're ready to handle them confidently and without financial stress. I hope that you guys enjoyed this video. Thank you so much for watching. If you liked this video, please give it a thumbs up. If you have any comments or questions, please drop them down below. I love getting to answer as many comments as possible. And if you're new here, then welcome. Welcome to the channel. My name is I am a wife, a mom, and a registered professional. And on this channel, we discuss everything money, investing, business, and personal finance. Please make sure to subscribe to the channel and turn on the notification bell icon so that you never miss out on any new videos. Thank you again for watching, and I will see you in my next video. Bye guys.